Air Lease to be acquired by SMBC-Led investor group. Air Lease agreed to be acquired for $65 per share in cash by a new Dublin-based holding company owned by Sumitomo Corporation, SMBC Aviation Capital, and investment vehicles affiliated with Apollo managed funds and Brookfield, valuing the company at $7.4 billion, $28.2 billion, including assumed refinanced debt. The deal awaits shareholder and regulatory approvals and is expected to close in H1 2026. We have been unwavering in our mission to shape the future of the aviation industry, said Stephen Udvar-Hazy, Air Lease's chairman, as the board unanimously approved the agreement. CEO John L. Pluger called it an exciting next chapter for the lessor. Why this matters now: leasing's outsized role in fleet refresh. More than half of the world's commercial fleet is leased, 58% at the end of 2023. Making lessors central to how quickly airlines can replace older aircraft with more efficient models. Consolidation among top lessors can influence access to new technology jets, lease pricing, and the pace of decarbonization across airline fleets. Ireland remains the hub. The buyer vehicle will be based in Dublin, consistent with Ireland's dominant position in aircraft leasing. Ireland's Central Statistics Office reports $268 billion in sector assets in 2024 and 3,000 people employed, underscoring the country's infrastructure, legal, and tax ecosystem that anchors global leasing. Industry capacity is tight. Airbus reported an order backlog of 8,754 commercial aircraft at end June 2025. Industry trackers place Boeing's unfilled orders at 6,581, keeping delivery slots scarce and older aircraft in service longer, conditions that tend to lift lease rates and asset values. What the buyers bring: SMBC Aviation Capital, Sumitomo affiliated. Among the world's top lessors, SMBC AC lists an owned, managed, committed fleet of 989 aircraft and investment-grade ratings, scale that can deepen order book access and financing options for new tech narrowbodies. Apollo and Brookfield, Capital Plus Platforms. Apollo managed funds operate aviation platforms, including Merck's Aviation, and have executed ABS and sale-leaseback transactions with major carriers. Brookfield has expanded into aviation credit, e.g., Castle Lake stake, signaling ample dry powder for fleet investments. Decarbonization angle: newer jets plus SAF policy pressure. Aircraft efficiency gains. New technology narrowbodies are a primary lever for near-term emissions cuts. Airbus cites 20% lower fuel burn and CO2 per seat for A320neo family versus prior generation. Boeing markets up to 20% lower fuel use for 737 MAX versus the aircraft it replaces. These improvements compound over large fleets. Policy tailwinds and constraints. The EU's Refuel EU Aviation requires SAF blends starting at 2% in 2025, rising to 6% in 2030 and scaling thereafter, though airlines have warned about near-term supply tightness, pressure that increases the value of efficient aircraft as SAF costs and availability evolve. Leasing as a bridge. With delivery slots constrained, lessors help airlines bridge to cleaner fleets sooner via purchase, leaseback, and placement flexibility. Particularly important as IATA projects 2025 passenger kilometer growth of 5.8%, and Asia-Pacific drives over half of incremental demand. Consolidation trendline. The Air Lease deal follows a decade of scale building among top lessors. AerCap's $30 billion acquisition of GE's GTCAS 2021 and SMBC Aviation Capital's $6.7 billion purchase of GoShock 2022 reshaped market share and order books. What to watch? Regulatory approvals and timeline. Closing targeted for H1 2026, subject to customary shareholder and regulatory approvals. Air Lease will suspend earnings calls while the transaction is pending. Placement power in a tight market. Backlogs at Airbus and Boeing and engine shop bottlenecks keep supply tight. Lessors with capital and scale may command stronger terms and influence fleet decarbonization pacing. SAF cost pass-through. As SAF mandates ramp, operating economics favor efficient aircraft. Leasing spreads could reflect this differential. The Air Lease acquisition underscores how consolidation among major lessors is reshaping access to next-generation narrow-body fleets. With delivery slots tight and sustainability pressures mounting, the deal positions Dublin even more firmly at the center of global aviation finance. You've been listening to Sustainability Soundbites presented by E+E Leader. For partnership opportunities, reach out to a member of our team.